you've been right. It's paid to buy the dip. Do you still feel that way when we get these sort of tariff back and forth headlines?
We still think dips are going to be pretty shallow. It's still the most hated V-shaped rally. I mean, the COVID rally was hated until we made new highs, and the rally from the fall of 2022 was hated until we made new highs. It's not any different this time. Hedge funds, I think, have really been very cautious. They were forced to sell near the lows, and we know there's $7 trillion cash. So while a lot of people are calling a top, I actually think that this is more of a mid-cycle kind of start of a new bull market.
Why? Why do you feel that way with the economic data starting to weaken and the fundamentals changing as a result of all the tariff drama?
Well, I mean, if I just did a relative comparison, when I look at the company outlooks now compared to February 2025, I actually think the outlook's actually better. When we look at 2026, I think we have better visibility on deregulation and potential tax benefits. I think the tariff risk is actually diminished compared to February 2025. And while the Fed's been on hold this year, I think that there's a case to be made. They're going to be dovish next year given what's happening with housing, and I think the trend in core inflation. And that's more important to markets is the Fed in 2026 than what the Fed does the next couple of quarters. So, I mean, overall, I think it means PEs could go up.
Tom, are you more confident in the Mag 7 idea or the small cap idea?
Carl, it's an overused word, but I think it is a bit of a barbell. I mean, in the near term, the washed out groups we thought would be the beneficiary, and the Mag 7 was really leading that because so many of the Mag 7 peaked earlier and bottomed before the S&P did. And we still want to stick with that. But as I look at the second half, I think the small caps really have a strong case to be made, because as long as we move towards a tariff resolution or the markets feel that way, then I think investors can actually start putting flows back into stocks other than the Mag 7.
Are you keeping a strategy in which tariff tensions go back up in your back pocket somewhere? And how does that read?
Well, I mean, I think we're all operating with the realization that there isn't necessarily an end game in sight for the tariffs. And I think these court rulings may push us a little closer to the end game. That's why I think it's a slight net positive. But at the end of the day, we all have to realize it's still a process. But I think investors are too pessimistic about the outcomes. I mean, I think we've been a little too the market's been too pessimistic about what tariffs could do. I think we've had a lot of folks that turned structurally bearish because of Doge. But when we look at what's happened in the last couple of months, I think it's more bark than bite, I guess is the best way to put it. I want to start this video with talking about macro. It's been a short week with Memorial Day, but through May 29th, the S&P 500 is up 1.6%, and the NASDAQ 100 is up 2%. Pullbacks continue to be shallow, and it's our view that they'll remain shallow because this is still the most hated stock rally. Now, what do I mean by the most hated stock rally? Well, I mean, it's been a V-shaped recovery, and investors really have been skeptical during that entire rise. I think it comes down to a sizable perception gap that, in our view, the tariff war and concerns have a bark worse than the bite. Let me explain. For instance, on this week, yesterday on May 28th, the International Trade Court ruled against the Trump tariffs. Now, it didn't remove all of them, but it ruled against them.